Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 8th, 2019. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, we're coming off the non-farm payroll number on Friday. Not a bad number, but not really a great number either. Just kind of okay. The U6 number is definitely the number you want to be looking at. It stalled out at 7.3 million. That mirrors the February number. So not a lot of progress there. It looks like the labor market is starting to flatten out a little bit here. But again, last month on the U6 number, we had the single biggest drop, I think, in the history of the U6 number from 8.2 million, I believe, down to 7.3, where it currently resides. So when we're looking at the VantagePoint indicators here, the first thing we want to take notice is when is the dollar actually selling off on a month-over-month basis? And almost every month, it's right around the end of the first week of the new month. Now, once again, we're coming down. We've got a double bottom in place down here, but we also have a double top sitting up here in this 97.15 area. Now, the indicators from VantagePoint are somewhat mixed. Our neural index is up, but our medium term crossing our long-term predicted difference, one of the most powerful indicators in the VantagePoint software, is saying indirectly that the medium-term trend is weakening against the longer-term trend, suggesting that this cycle of selling dollars around the middle of the month will continue. So we definitely want to keep an eye on that. When we look at gold, we can see that gold is forming another bottom again down here, right around this 1285 area. We have some additional support into that 1265, but be very cautious with Monday trading on both the dollar and gold. If we see a big rally up on the dollar on Monday, chances are it sells off on Tuesday. Same thing with gold. If we see a big move down on gold on Monday, chances are it reverses on Tuesday. So be cautious of that. But right now, we can see that we do have the medium term crossing the long term predicted difference to the upside, warning us that gold could be getting ready to recover. We've also assessed we have a rising RSI, so momentum is slowly starting to turn back to the upside. Now, with oil for next week, oil again is very much following this equity rally up. So if the equities turn lower, we will see oil turn lower with it. We can see a very minor sell signals starting to form on the medium term crossing the long term predicted difference. We're heavily overbought on the RSI, coming in at 84.1. So again, this points to also, again, a corrective move lower on the equity markets. We've priced in, in my respectful opinion, just about all the positive things we can plug in here has come to fruition. The China deal being the China US trade deal being the last. But we have very significant resistance, again, up to the 29.34 mark. Excuse me, I've talked extensively over the last several months of this area around 28.33. So our sell zone is between 28.33 and 29.40. Now, once again, we're basically about 9 years into this equity rally. So yes, the Federal Reserve is on pause, but that doesn't necessarily mean that that's going to be an overall positive for the equity markets. Now, as we move into our main Forex pairs here, again, we've got a busy week. We've had the main number out here with the non-farm payroll number. The Fed is pretty much out of the picture for now. So when we look at our main Forex pairs, the first one we want to bring to everybody's attention is, of course, the Euro-US, the most heavily traded Forex pair in the currency market. So when I look at this right now, the first thing we want to assess here, guys, that the medium-term trend to the downside is weakening, but we have absolutely massive stops below the 111 mark. Now, the reason I'm saying the 111 mark, we have 111.76 was the immediate support. We can see that we connect the double bottom right here. And again, a double bottom doesn't necessarily mean it's not going lower. It just means we have buyers sitting down there, at least for now, around 111.84. Now, when we back our VantagePoint software out a little bit further, we can see a considerable amount of additional support. I'm going to bring this out to 9 months, maybe even a little. I'm going to have to go a little bit further here. This is the beauty of the verified support and resistance zone, is that they will find this support. This line down here is coming in around 111.11. So unless we break through that area, there is still a bias to the upside on the euro pair. That indirectly suggests we could have a move pending lower on US Swiss franc. Now, US Swiss franc, again, heavily correlated to the S&P 500, positively correlated, I might add. But the fact is that it's not making any big moves here. Our most recent high on this particular pair, 101.24, we basically failed at that level again. It would suggest that we are starting to slowly grind back towards that area, but any disruption in the current rally in the global equity markets will send this pair lower very, very quickly. So be very cautious with this particular pair right now, and we want to continue to watch the medium-term predicted difference, combining that with the neural index. Now, when we look at the pound dollar, once again, the data, this is data driven, this particular pair with Brexit. Brexit's on again, Brexit's off again. We've got a hard exit, we've got a soft exit, we've got no exit. This is not a pair that we want to spend a lot of time with right now here, guys. And the reason I say that is that it's one of the most volatile pairs in the Forex market to begin with. And when you've got this dark cloud hanging over the UK in the form of Brexit, then we really don't need to trade this pair right now. We want to be very, very cautious with it. We're seeing very, very wild intraday swings, but right now the bias is still lower on a hard exit. So we'll see what happens, but again, be very, very cautious with this particular pair. Now, with the dollar yen, we could have some very, very good selling opportunity coming up this week or maybe next. But when we look at this, we're moving into a very strong verified resistance zone that goes up to the 112.12 area. Be careful around that area. If we're going to try and short, that's where we want to do it. We can see that the medium term is starting to cross over the long-term predicted difference. One of the very best trending and contrarian indicators in the VantagePoint software. We can see that we've got a heavily overbought RSI. We're waiting for that neural index to turn red and turn down. That will likely be the trigger to start shorting this. Now, when we look at our intraday pivot area for Monday, that area is 111.45. Any breakdown below that area, guys, we want to get short pretty much right away. What the trigger, in my respectful opinion, will be is a sell-off in the equity markets, and that's basically right around the corner. We know that there's going to be a significant drop in the equity markets. It's not a question of if, it's a question of when. But when those stocks come under pressure, you want to immediately come to two Forex pairs to short, the US Swiss franc and the dollar yen. These are excellent money makers during a risk-off scenario. Now, as we look at our three main commodity currencies going into next week, the USCAD. Now, the unemployment report out of the US wasn't too bad. It wasn't great, but it wasn't horrible. Canadian unemployment report clearly missed the mark, so that could put some upward pressure here, on this particular pair. But we have very stiff resistance in this 130, just below this 135, around 134.50. But we've also got good support now, and that's coming in right around 132.96. So for now, guys, we continue to play the range here and monitor the VantagePoint indicators. The main VantagePoint indicators are suggesting we do have some upside. We did enjoy some very good shorts last week on multiple days, and then you can see how the trend very quietly shifts back to the upside. Now, we got this move on a Friday, so remember, Monday trading is usually a fake trading day. Keep an eye on the 133.66 area. If this area holds, we can use that area to get into longs on Monday and maybe Tuesday also. But again, if longs have any hope whatsoever, we need to hold above 133.66. And more importantly, we need to penetrate this very, very significant resistance just below the 135. If we can get over 135 here, guys, when we back our charts out, that'll open the door back up to this swing high that's coming in around 136.63. The question I often get, that I often get is, what do we need for that to happen? We need stocks lower. We also need commodities lower, like oil and gold. If they're going lower, then USCAD is going lower. So monitor those two intermarket correlations very closely. Now, on the positive note here, there's a very mixed signal here in Aussie US, but when we're talking about using the newest VantagePoint verified support and resistance levels, you can see how the verified resistance marks its territory right now on the the Aussie US dollar. It's marking its territory just below 71.40. You can see multiple days here we're banging up against this level and we're failing. Now, we do have good support, but that support is down closer to 70.50. In order to get this pair moving, we need gold prices higher. That much I can tell you. We need a risk-on scenario to boost this, but we must break through this area. And the fact that we're not leads me to believe the equity markets are getting ready to basically fall any day here. So keep an eye on this level right now, but be very cautious with longs up in this area. The same here would apply to New Zealand US. Now with New Zealand US, it's made a much bigger move to the downside. We have very strong support coming off the February 12th low. That area currently resides at or about the 67.20 area. So there is the possibility of a long trade here. We've got our medium term crossing our long-term predicted difference. RSI is heavily oversold, so watch this pair for a potential long around the 67 mark or just below. There could be some very good opportunity. Our VantagePoint T-Cross long is all the way up at 68.06. So the further we move away from it, the more likely it is we're going to retrace to it. The same applies to our long predicted. This very powerful strategy that I just taught a number of new traders in Tampa this previous weekend. You can see that we use the blue line, the predicted moving average, as a daily pivot, but the further we move away from it, the more likely it is we're going to retrace to it. So we've got a predicted low coming in at 67.04, predicted high at 67.64. We also have the long predicted moving average at 67.96. So we know where we could potentially buy from, but we also know where it could be quite lucrative on short. So this is how we want to look at things. We've got a busy week ahead, but I'm sure we're going to all have another fantastic trading week. So with that said, this is the Forex Weekly Outlook for the week of April the 8th, 2019.